Good evening and a very warm welcome. Girish, we have Animesh, all of them representing various capacities uh, in the industry. So, without further ado, let me just pass it on for everyone to do a quick intro of what do you do and a little bit about your organization, and then we can bring up the questions. Over to you, Fanish.
Thanks, Harsh. My name is Fanish. I head the enterprise vertical at Porter. And essentially, what we do is we transport everything from an envelope to a large machinery, primarily into the last mile, middle mile scene within the cities. And we are here to bring efficiency into the market. It's a highly fragmented system. We started out with trucks. Right now, we are doing two-wheeler. So essentially, many of my customers are sitting in the panel as well as in the room. Sure, that's about me.
Hi, I'm Anjali. I lead sustainability at Zomato. And I guess the most relevant thing to share is that Zomato is a member of EV 100. We've committed to going 100% electric by 2030. And it's quite a big deal because we don't actually own our fleet. We depend on either individuals to onboard themselves as delivery partners, or we use third-party logistics partners. So it's a very big and bold commitment to make, but showcases our commitment to going electric. I'll pass it on to Girish.
Hi, everyone. A very good evening. At the onset, let me congratulate TWF for such a fabulous show. Thank you, Harsh, for hosting us. My name is Girish Nagpal, and I am the CEO and co-founder at MetroRide. MetroRide is an electric mobility platform catering to the needs of a daily commuter as well as the deliveries. So we are an end-to-end platform which makes your daily commute as well as your deliveries seamless and affordable. Yeah, over to my.
Thanks. My name is Animesh. I head the customer business for Here Technologies. Here Technologies is a world's #1 location platform company, and in short, what we call as an elevator pitch. What do? We solve the location-related business problem for our customers. Now, as you would know, see, location as an element is something which is present in each and every vertical. Uh, Predominantly, we associate it largely with auto and transport and logistics, but that is not the only segment. There is a lot on the tech side, on the media side, on the telecom side. So we help solve those problems for our customers. We are a European company, and we've been in this business present in almost 200 plus countries. Harsh, over to you.
Thank you, everyone. So, starting with a topic about startups and OEMs. So, I had that question, and then me and Fanish were talking, and Fanish's like, define startups, and I was like, yeah, that's a good point. And many OEMs also startups in electric mobility, and therefore, just sort of extending this question, that we've seen a lot of partnerships built over the last 2 years between form factor makers and ecosystem players. So obviously it's working out well, but how do we see the future of it, and are there synergies? Is this symbiotic in nature, or is there a power center? And if yes, then how can we sort of balance it? So starting with Fanish. All right, so let me just request Animesh to sort of come.
Sorry, you kept the mic a bit.
Oh,
I
sorry.
didn't hear the question.
Yeah, so I was asking if automotive manufacturers, EV manufacturers, and value chain players, they've been collaborating together, and how's that been in your experience? And are you building for customers? Are you building for customers? And how's that value chain working out for you?
Okay, so when you talk about OEMs, auto OEMs, and EV manufacturers and all that, so there are always, see, as a tech company, we have our own, I would say, what we do is in terms of generating the demand is by taking care of certain challenges which are there in the minds of the people. Right. Today we are talking about EV adoption. EV adoption comes with its own challenges. Something one biggest factor is what we call as a range anxiety. Right. People talk about I take a EV and would I be able to really move from point A to point B, and which is a very, very, I mean, till now we were quite confident that I take a Gaadi, and if I have to stop at a petrol station and fill it up, I will do that. But that changes when it comes to EV, right? So as a tech company and as a location company, what we have been trying to do is we have been trying to mitigate that problem. That's one. Apart from that, what is also happening is that if you look at the traffic, or rather the travel pattern of any user, it's always very complicated. It's not that you're going, every time you're going from a point A to point B. You go from a point A to point B to point C to point D. It's generally, the driving pattern is very different. So as a tech company, what do we do to ensure that you are able to complete your entire journey from point A to point D in the charge that you have? So there are multiple solutions. I mean, I don't know whether I can get more details into it, but there are multiple solutions available, which is called multi-stop routing. There are solutions around picking up from the EV stations and giving you the data, or picking up the data from your car, or your two-wheeler, or a commercial vehicle, and right in the beginning informing you that, look, you got so much charge, you cannot go to your destination B or destination C, you'll have to reroute yourself. So all these are some of the work that as a tech company we have done in terms of, I would say, taking care of that aspect of EV and helping it from a acceptance in the country.
Sure, thank you. Bringing you in here, Girish, how's been your experience building for the ecosystem?
Sure. So if you look at, Yash, today, the life cycle of this EV adoption, of course, we can expect that the retail customer is going to buy EV one day, but you can't expect an end user to buy it just for the economic reasons or the environmental reasons alone. So if you look at the adoption, like you very well mentioned, that there is a huge synergy between the OEMs and people like us, or there are multiple solution providers or delivery companies which are using directly synergizing with the OEMs, right? And why it is happening is, let's take a step back, and if you look at the typical OEM of an EV, it's very unlike the traditional OEMs. Of course, you have the legacy companies, the multinationals of the world making EVs, especially if you talk about the EV adoption, which is massively catching up in the half-ton category for cargo and as well as for passenger. Almost, we have 5-6 big players, which are all national players who are doing really well, building some fabulous products for India and for the world, right? For them to go and sell it to the end user is going to take a lot of time. If it's a driver or a DCO model, it's going to take time. But for them, the lowest hanging fruit is there are a lot of companies which are trying to cater to the needs of the e-commerce or the likes, right? So there's a huge demand coming from that segment also because of the top-down approach. So one simple synergy which everybody saw was, let's have OEM bringing in a model and working with a solution provider like us. Like there are multiple companies who are catering to the e-com companies, to the food delivery companies and the likes, right? So of course, it's not the OEM directly financing or leasing the vehicle, but you always need a tripartite kind of arrangement, or an NBFC or a fintech company coming in. But it's always this synergy of the ecosystem which is driving this adoption, so much so that if you look at last quarter or so, almost 30% of the three-wheelers coming into our segment is EV, and which is a massive, I would say this is the inflection point. We talk about inflection point coming in next 1 year or 2 years, but at least for this half a ton three-wheel segment, I think it is now, because it's changing so massively, and thanks to the ecosystem which has been created by these OEMs and the solution providers.
Sure, thank you. Very interesting. Just bringing in Anjali here. So Anjali, I'm on Zomato a lot more than I should be. And only thing which sort of brings a respite is that I also hold some stock. So I'm like, I'm playing both fields. It's okay. As a stockholder, it's working well. But just, this is on a lighter note. But on a serious note, what do OEMs need to build for their customers? So I know Zomato does not have its own captive fleet. However, it's a key customer, secondary customer to say. And therefore, what do OEMs need to do to make sure that that players like Zomato are getting what their customers need?
So the short answer is actually, okay, well, let me split this into two-wheelers and three-wheelers. On the two-wheeler front, what the audience may or may not know is that delivery partners they already have their own bikes, and these are typically second-hand bikes, so they're very cheap. And so giving up an asset is definitely not something that they would look to be doing in the near term. And therefore, we depend very heavily on them to rent bikes, rent EVs, or avail of low-cost financing, so to make it attractive enough to them. So I think but the requirements to really get them to do any of that is, or even to rent, the requirement is that the bikes be high speed, long range, and multi-purpose. Because in the delivery partners world, time is money, right? They cannot stop for a single minute. They are in the delivery job to earn. They earn basis the number of deliveries. They also earn basis distance, and there are various other incentives to operate under various conditions like rain and festivals, etc. But fundamentally, time is money. So they can't stop to charge for long periods of time. Anything that occurs in the period in which they log in could result in decreased earnings. So we would look for long range, high speed, and multi-purpose, because ultimately a delivery partner to own the vehicle, and a lot of them have expressed interest in owning ultimately the vehicles, it would need to be fit for personal use as well. So these are some of the requirements on the two-wheeler side. On the three-wheeler side, long range is again a requirement, because our warehouses, and we supply to restaurants under Hyperpure. Our warehouses are typically quite far away from city centers, right? So the vehicles can't get stuck midway, and in places like Bangalore, where I'm from, the traffic can sometimes lead to you getting very stuck for very long periods of time. So that's a concern.
Sure. Thank you for addressing that. Just bringing in Panish here. So I know the requirements for Porter are very different than probably the rest on the panel. So what are some of the key consideration factors for Porter? Do the kind of OEMs or the kind of products matter? And if yes, what are some of the consideration factors for you all?
Definitely, and Anjali here had made a lot of valid points. It holds good for Porter as well, because as Zomato, we are also asset light. We don't own even a single bike or a single truck for that matter. And we have one of the largest fleets in India. One major consideration is unit economics for us, in addition to the range and the distance that is there. Because until and unless we are able to convince the TCO and the TCAs to our driver partners, we will not be able to champion the cause of sustainable mobility for them. And someone in the panel had initially pointed this out, that all of these people, especially those who are into owner come driver kind of a persona, only look at how much they are able to earn at the end of the day. It's for them, earnings minus expenses is what matters to them. And if that is something which can be made very clear, less interruptions in business, less interruptions in running time, better serviceability, and because these vehicles will be used for more than 100 kilometers in a day, especially trucks, we do need a robust service after sales model for them, which makes them feel that, okay, whatever the asset that they are having right now does not become their liability. So that is one of the key factor. The second part is that a lot of EV tech is still nascent. There are a lot of players who are coming with a very good intent in the market, and there are the players who are actually rebadging the Chinese versions of their vehicles. And I feel that there's a lot of bad press regarding EV two-wheelers in the day. Some of them are founded, some of them are unfounded, and it brings a lot of apprehension the end buyer's mind, and he starts doubting whether to buy it or not. So even if for someone like a delivery partner who drives for more than 60 to 70 kilometers, for him EV should be a no-brainer, because he will be able to recover the asset cost within a short period of time. But then it does not go, that unit economics bit does not permeate to his level. For him, the cost of ownership is tied to how easy I'll be able to maintain. How much will I get if I sell this? Because in our research, a gig worker does not remain for more than 2 years in the gig. So that's about it. That's what we look at Porter.
Sure, thank you. That brings another question, and this question is very cliched, but always is pertinent. That is India EV last mile mobility ready? They say that build and they will come, and so a lot of ICE last mile makers always ask us. So we are a consulting firm, and one of the dodgeball that comes our way is, hey, how much gas, pun intended, is left in ICE, and should we stop ICE lines at all, or should we just go only electric? So just taking sense from you, whoever is comfortable answering this, is this the final frontier for electric vehicles and last mile mobility, or can there be a blend of powertrains as you see it on your fleet? Maybe you first, Girish.
I'll take that. So I totally understand the conundrum which you spoke about, because for somebody who has been making two-wheelers or three-wheelers or maybe launching a new product, so where do we go? So if you ask me, seeing the B2B customer, which typically is driving the whole last mile today, because all the gig workers ultimately go under some umbrella or the other. So if you look at the unit economics, because of course there is an angle of your economies of scale, but even if you just look at the environmental angle, you park it for the time being, and you just look at the commercials. Anybody, like you said, if you're running the vehicle, you're making money. At the same time, you're burning fuel. And looking at the fuel prices off late, if you look at, there is a driver or a gig worker who works on your platform for 8-10 hours, what he's making ultimately is, like Fanish very well mentioned, whatever he's earning less the cost of the vehicle, and which is coming huge, because for somebody who's just making, let's say, $1,000, a cost of 20% of which is 200-250 rupees, is a huge one, because just the fuel cost is 25% of your earnings. And if it was electric, it is going to be less than 50-60 rupees if you charge at home, which is a huge advantage as a end user. And that, of course, multiplies when you're doing it of thousands of fleet for a B2B customer. So if you ask me, for the last mile, I think every last mile has to be electric. It has to be, depending on your use case, if you want to go for a fixed battery or a swap battery. And of course, given the changes which have been happening in the charging infrastructure and the fast charging, I'm very sure that that's a very interesting space to be in. Within electric, which form factor do you go for? You choose swap, you choose fast charge, or you choose slow charge, right? So that's, again, definitely depending on the use case. But the whole idea is, the more the vehicle is on the road, the more the company earns, the more the gig worker earns. And that can only happen when your running cost is minimal. At the same time, it's giving you that liberty that if you want to not just 100 kilometers, on an average, our vehicles actually run 130-140 kilometers already, which is, I would say, around 70% capacity, right? So if I'm looking at running 200 kilometers in a day, what is that ideal form factor? So that's how we have to see as a use case. Yep.
Sure. Yeah. So basically, it boils down to unit economics and TCO to an extent, and can be powertrain agnostic, but electric's probably preferred. Right, Animesh.
I wanted to add a point here. When
Sure.
we talk about any product introduction in a new market, I'm taking this as a new product, right? So there are two aspects to any acceptability for that product in the market. One is definitely the economics, the cost aspect of it, which, as you have very clearly pointed out, that a cost of a running cost of a EV versus that of a IC is definitely there's a big advantage compared to the current, I would say, petrol or diesel cost, and compared to the amount of, I would say, the service cost also, because the amount of component which is there in a EV compared to that which is there in an IC, there is a huge difference. So definitely from an ROI perspective, purely economics, it makes a lot of sense. But when you talk about an acceptability of a product, and when you talk about the demand, I would say picking up of the demand, there's another aspect is the readiness of the market to accept that product, right? Now, if I look at an EV, there's a lot of talk about it. There's a lot of, but I still, if I look at the amount of units that is being sold in the country is still on a very, very lower side, and that is because the market is still getting ready. One of the biggest factor which is there is the amount of EV charging station which is there, and the time taken for charging a vehicle. So today, if you look at the kind of people who are going for it, who have a very fixed, I would say, kind of like, for example, in your kind of a scenario, you have a very, I would say, predictable travel pattern, right? If you have a predictable travel pattern, you know in a charge, it'll go for X kilometer or a Y kilometer, and your one charge will do it. So you really don't have to go around for a charging stations and all. So that becomes more predictable travel pattern for you. But for other people, if I look at probably from a commercial to a non-commercial, a passenger vehicle kind of environment, the travel pattern is very unpredictable. So there, the infrastructure, which I know is developing crazily, and I can tell you because that's one thing that we track very closely to ensure that our base layer, which is the map content, is available with all the EV charging stations so that we can give those kind of services to our auto OEMs, is developing a lot. So right now, from an EV acceptability, it will be more on the last mile perspective in the cities and all that. We will still take time before it goes on to the middle mile, because middle mile, again, the distances traveled is very large, and we may not have that kind of infrastructure here. So we're definitely going to see a lot more. And another point, Harsh, I just wanted to take one more point was, see, if you see the graph at which the increase in the EV from a commercial vehicle or a two-wheeler, we are going to see an inflection point at about 2025, 26, where probably the IC and EV is going to remain at the same level, and then it's going to go up. IC is not going to, but this is not for the commercial. For the commercial, probably it will take even longer. That is because commercial is not just last mile, it's also middle mile and the first mile. So there's a whole spectrum of it. So I just wanted to bring that point on.
Sure. Yeah, completely agree. I think the asset utilization makes it a perfect case. And like with all commercial vehicles, the asset turnover, how many runs can one get, as long as the milk runs are optimized. Therefore, the electric powertrain has checks out well. So Fanish, you've been an OEM guy. We were talking earlier. You were in Bajaj. I was in Honda, and we've seen our fair share of ICE two-wheelers. And then at Porter with electric mobility powertrains, how do you reconcile and what's your take on the powertrain mix?
Well, right now, if I have to say, EV constitutes just about over 3% of our fleet. So that's where we are right now. It's still overwhelmingly ICE. And it just so happens that we haven't, although we are like late entrants, we are not promising that we will be the part of the 100 EV kind of a club. By 2030 we will be doing there. But that literally stems out of the fact that there is huge inefficiency in the way entire last mile delivery works. I'm not sure if Anjali has the number for Zomato, but we have seen that essentially any driver partners in last mile delivery segment, whether it is hyperlocal or a point-to-point system, spends literally 40 to 45% of the time idle. Now that is when the asset is not being used, it's just idle. It is the time when either in Zomato's case, the food is being prepped, or in Porter's case, someone is bringing the material to be transported from one point to the other. Now, with that kind of an idle time, with the range anxiety and the current range that EV products have to offer, it becomes a kind of barrier for us as a LSP to sort of make commitments into the EV front. It is a difficult problem to solve, but I am seeing that hearing a lot of OEMs, I guess Euler Motors did mention that they are using telematics to predict where to put the charging stations. I guess even Omega Seki mentioned that they are taking a lot of data which is being generated, big data, which is being generated to ensure that the charging infrastructure is put up at places where the users need it the most. It is not as simple as going into a petrol station and getting it filled. So I believe that the real inflection point does not just come with the advent of EV technology. It also comes with the incremental improvements that could happen with the charging technology as well. Especially in an intra-city last mile point of view. And definitely that is where the current hesitation is there from LSPs such as us. But definitely we are looking at, and we are having partnerships with nearly all of them, you name it, Altigreen, Omega Seki, Euler Motors, Piaggio, the big names and the new ones as well.
Sure. Thank you. Yeah, makes sense. Also, with the advent of advanced cell chemistry PLI, 18,000 crores have been earmarked for ACC PLI. That's a big shot in the arm. We should be hopefully able to control a large part of our supply chain, have less reliance on imports, and therefore probably EVs beyond 3% to a number where it is sustainable. I'm still a little romantic petrol head in my head, so just going to leave it there, but maybe one of these days, sure. Just bringing in a question on challenges for electric mobility. One of the challenges often which gets called out is EV financing, especially in last mile. If you for the moment consider DCOs or MLOs, market load operators, driver cum owners category, these are typically people the financiers will not touch with a barge pole. These are called NTC, new to credit, or ninja customers, no income, no job, no asset customers. These are risky customers. You do not know whether they're going to pay, and so on and so forth. And therefore, the concept of a tripartite finance agreement emerges, tripartite between OEM, between last mile mobility provider, and the user themselves. It brings some comfort to the underwriters. They are able to attribute better funding, better lending rates. And the irony is that these Ninja or NTC customers are the people who need better access to financing in the first place. And we make it harder for them to access to credit. So, and we were speaking about this earlier, where some of the countermeasures like bank guarantees, minimum guarantees, etc., have been deployed. Do you want to talk a little bit about this, Girish? Maybe we could start with you.
Yeah, sure. So if you look at the profile of the borrowers here, like you mentioned, Ninja, that's a new term I've heard. But yeah, he's typically somebody who is not having any kind of CIBIL scores or something which the bank can rely on. So a typical traditional NBFC would always be wary of financing him, right? And add to it the three-wheeler form factor, which makes it even worse. Right, so when we started, we had two options. Either we go the normal way, which is have a mix of ICE and EVs, but we were very clear that we're going to be 100% electric, and that's where we looked at the drivers who could come with us as DCO. The denominator was very small. When we started in Delhi, it was never an issue because you have a huge supply of electric vehicles. So we are a company which doesn't take asset on our books, right? So we are an asset-light platform. So in Delhi, we never had an issue, launched it. But when we started in Bangalore, it was a huge issue because the denominator of drivers was hardly any, right? For people to come on my platform, there were a handful of people. So we had to then create an ecosystem. And that's what took us almost 6 months to bring in. Of course, I would say even NBFCs are still wary. The traditional financing companies, we've not been able to crack. But thankfully, we have quite a few next-gen fintech companies who've joined hands with us now. So we have this tripartite arrangement because I cater to a daily commuter and a customer who orders almost every day, right? So my run and my income for the gig worker is very predictable. So we come with a model wherein we give a minimum guarantee for the number of hours the gig worker is on my platform. And of course, he's exclusive to me for those number of hours. And we get into an arrangement of a tripartite agreement with the fintech company for basically financing this gig worker or a DCO, provided there is an escrow arrangement, or at least there is a guarantee from our side. So long as the driver is on my platform, they would get their EMI sorted. So this really helped us in onboarding a lot of DCOs. And of course, then there is another angle wherein we take on our, of course, platform, we lease these vehicles from different players and then in turn lease it to the drivers. So that in a way sorted the supply side for us, because onboarding drivers, especially we are a platform where 30% of our drivers are women, right? So we work with several NGOs and onboard these ladies who never had driving licenses or even vehicles, right? So we now facilitate both. So we ensure that they get a vehicle and they also get a license through our training partners. So that's been a big leap for us to completely solve the supply side of it. So that actually, which came as a challenge, now has become a boon, I would say, because these ladies who we help them get a license and then even a vehicle, these are the best people on board, because you would see they never take a leave. They are so committed to the job, and you will see almost 0% attrition in those cases. So that really solved a big business problem also for us.
That's amazing. And I think props to you guys for trying to solve a very important problem. Anybody who's tried to hail a shorter ride in Bangalore can probably remember the rejections faced and then existential crisis of how am I going to get to point A to B. So Girish and team try to solve that. Talking about sustainable financing and inclusion of underprivileged personas into economy, is that something which Zomato is also cautiously trying to do by bringing sustainable access to credit, sustainable financing? We've seen the likes of World Bank and such global organizations do that. And earlier we were talking about CK Prahlad's triple bottom line, which talks about sustainability, but at the same time, business merits of it. So just wanted to draw some of your experience on that, Anjali, how Zomato is trying to, if they're trying to get into any of that.
So I'll keep it relevant to EVs for now. The path that we're currently pursuing to get more EVs into our fleet or get more rider partners using EVs is that we enter into agreements with companies that are renting either their own renting others' vehicles, or as in vehicles manufactured by others, or renting their own vehicles, as in they've extended themselves into leasing model. And we essentially have this minimum guarantee arrangement for a period of time, which ensures that our riders have access to EVs. And we, of course, all of this is very, location specific, etc. But that helps us ensure a certain amount of supply availability, because supply, especially in the last, I would say, 6 months, has been an issue. So that's the sort of facility we'll give to rider partners. And a lot of them, yes, are women. But as you know, women face a whole host of other challenges, which is why the work that Girish is doing is so commendable. Women, even if they want to become delivery partners, are sometimes not allowed by their families. Very often, in fact, not allowed. They're not allowed to wear T-shirts of Zomato. They're castigated for a whole host of reasons. So importantly, but it gives us a route, as he pointed out, especially women who don't have driver's licenses, and most women don't. The low-speed bikes especially gives them an entry into the mobility sector. So yes, we do see it as an important route to diversifying our fleet, which is a big sustainability objective. And at the end of the day, I think the social inclusion argument is an interesting one, because we find that the women who benefit most and stay on as delivery partners also tend to be from households where they are separated, or they come from more marginalized sections of society. So these are genuinely more women who have higher financial needs. So yes, I would say that EVs and financing arrangements, not necessarily direct finance, but arrangements like minimum guarantees, can really drive social inclusion in last mile delivery.
Sure, thank you. And in tandem to that, I remember one of the engagements we did for a automotive captive finance player who had this wonderful ratio that NPAs are 97% lesser when loans are extended to women. So it's 97% less likely that loan issued to women would go bad. So
And they're actually safer riders.
yeah, yeah, yes. So definitely, it holds merit from a social and business point of view. Fanish, just drawing on your experience with sustainable financing and financing with tripartite agreements, etc. How's that been for you?
It's very much similar to what probably Girish mentioned, and it just so happens. So I'll bring a different perspective into it. Your acronym of Ninja is actually partly untrue. The reason is because these financing systems, these creditworthiness systems, are not actually accounting all the income that they are generating, where 90% of these gig workers are generating income from. And this is where companies like Porter, Zomato would probably come in, because we would have a very rich data about how many hours they are logging in, what is their earning per day, what is their earning per month. And this is actually the way forward, that a large swath of people who have not been credit analyzed or who are not open to credit can come into it. The other probably a huge potential would be that every vehicle, whether it is ICE or EV, has got a certain life, and this life is very frequent for a very high utilization vehicle. Let's say a diesel vehicle can run about 2 lakh, 3 lakh kilometers before it needs an engine overhaul or something. And unlike personal vehicles, where the fitness certificate gets renewed on a 15-year basis. Sorry, again, I'm from Bangalore, so Delhiites have it hard, I know that. But every 10 to 15 years, the fitness gets renewed. But here, for a commercial vehicle, it gets renewed every 2 years. So every time they need to really pass the test of having this vehicle. And beyond a certain point of time, there are other things that go bad. So there is a high churn ratio, as in if you keep your car for 5 years, well, that's median for it, or an average time for holding an asset. But a vehicle needs to be changed every 2 to 3 years. And when the change happens, it allows the EV to come into the picture, because they would have been earlier ICE people, and they have a huge history of working with gig companies, and their earnings is documented pretty well. And this is where financing NBFCs or banks themselves, if they come out of the view that it has to be associated with a CIBIL score or something like that, they would find huge value in underwriting and making the so-called ninja loans to be less riskier.
Yeah. So this was the debate we always used to have them, that let's say the case of gig workers or farm workers. So it's really not documented, but they have the necessary credit or means to pay it off. But in the bureau scores, it doesn't really reflect. And for them, for a financer, the turnaround time to issue loans, and if they go into a field investigation, so most of it is done, it is automated now. Average turnaround time for a loan is less than a minute. But if they have to do field investigation, it adds a cost to them for applications, and therefore it's a pain which they do not want to take for now until there's enough scale. So, or probably someone builds a repository or a parallel bureau where this can be investigated. Moving on to another area about, and I think Fanish, you were talking about it, are the low-speed electric vehicles. So they do not need any license, they do not need any pollution control. And there is an argument which says that because they do not come under the Central Motor Vehicle Act 1989 to a large extent, that's why they're, and not just the price point, but those are some of the reasons why people are purchasing these low-speed EVs. Is that how you guys see it as well, or is there a different sort of observation on that?
So this question does not really apply to us because we do not use any low-speed vehicles. And I, as a person, have always believed that you're at your best when nobody is watching. How do you behave? That's the most important thing, right? The whole idea of of course, there is this licensing which is not required and stuff. But to my surprise, I have heard this story multiple times that the very reason a lot of these gig workers pick up low-speed vehicles is that there is no challan on it, right? Because it can't be tracked, there is no registration. But we were very clear that even if there is nobody watching, because he's driving on my platform, so I am the one responsible. So we do not take any low-speed vehicles on our platform at all. So we do not have even a 1% of these low-speed vehicles. 100% of our vehicles are high-speed, which are always regulated, right? And just adding to the point, I was actually very keen to add to what Fanish was talking. This also correlates to the same question as well, right? So I know of a company, like a couple of my friends are working on a fintech startup, which basically leases the battery based on the driver's driving behavior. And he's going to be charged the swap rates based on how he's been driving, right? So that is I think that's the next thing which is going to come in the financing of the EV space. So one is, of course, how many hours are you really logging in, right? How many hours are you on the different platform? And this, again, works as an ecosystem because the OEM has to be on the side of this, because for this to enable the platform, let's say a Metro Ride and the OEM as well as this fintech partner has access to a common data which can tell you how many hours did he drive on my platform, how many days did he really mark his attendance, right? And how much money did he make? So based on that, his credit worthiness can be built. And that's going to be the future, because we might have multiple yardsticks to measure how reliable this person is, how fundable he is. But ultimately, if he's a guy who's actually making money and sincerely working, so that makes his credit worthiness. I think that's the future, which a lot of fintech companies are already working on. So yeah, just wanted to add that. On the low-speed vehicle, I'll pass it.
I want to add, you brought out a very interesting point, and I just wanted to add to that. You mentioned about the behavior of the driver, and how based on that, the battery, it can be replaced and all that. So, another very side benefit, or what I call as a value-added services that has come from EV is what I call as a UBI, which is a usage-based insurance. So today, if you look at your EV is nothing but it sends out tons of data, right? And that data talks about how you're driving, how you're braking, what is the speed at which you're doing. All this data is being captured on a daily basis using the telematics, right? And today, there is a big business case where insurance would want to buy the data. And based on that, don't be surprised if next time you go and your insurance comes up and you have a higher premium because you have been reckless in your driving, and you have a lower premium because you have been a very safe driving. So that's one of those side, I would say, value-added services that has come up. And I really wanted to bring that out.
Sure, thank you. Talking about logistics efficiency, so India has a lot more ground to cover when it comes to logistics efficiency. A lot of government measures have been announced, whether it's the ULIP, whether ONDC, which will have a strong bearing on logistics efficiency also. How do you feel as operators in this ecosystem? Is there enough ease to operate? Is there a lot more which remains to come through? Or where are we on the spectrum? Girish, or maybe Fanish, we can start with you.
Probably actually take that up because ONDC and all these new words are creating a lot of buzz in the market, and rightfully so. So basically, I mean, if there are any computer engineers here, probably the easiest way to explain ONDC is that ONDC is what is to digital commerce the way TCP/IP was to internet. So that is how things are going to get a lot democratized. You are able to open any web page thanks to TCP/IP protocol. You'll be able to see any product of any seller in any app thanks to ONDC. So whether you open PhonePe, you open Zomato, you open Paytm, if they are on ONDC, you will be able to see the seller's products in their app. So basically, what is going to happen is that everyone is going to be a super app without having to invest in the entire categorization, making a kind of a layout, and you will be able to shop. The good thing for the sellers is that they don't have to be captive to an end-to-end solution like a Zomato. Sorry about that. Like an Amazon or a Flipkart. So it is literally gonna remove the apprehension of government that you're gonna have no competition because Zomato is handling literally everything. And there is a lot of flag that these companies are bringing out. So where do logistics service providers come in? Now that's where things get interesting. What happens is that Amazon or Flipkart is Amazon or Flipkart because of their end-to-end supply chain. They do the first mile well, they do the middle mile extremely well, and they do the last mile the best. A lot of what we know about last mile logistics today is what Amazon set as standards about 5 to 10 years ago. And the same day delivery, the next day delivery, all these things, people use Porter to just get things delivered within 2 hours. The habit has been formed thanks to these people. That's where LSPs come in. And that's when, through API integrations, people could use Porter to just buy some product from a local reseller in Bangalore. And the local reseller does not have to pay the hefty commissions that have to be paid to Amazon for listing on their website, and they would be able to ship. So this is why the pilot is being done in Bangalore. One is that it is tech friendly, and the second part is that there is a huge seller base out there as well. Yeah.
Thank you. Girish, over
Yeah.
to you as well.
To me, I would see it from two angles. One is, of course, the smaller sellers get a huge benefit out of it because what it does is ONDC actually democratizes it and makes it a fair field for everybody to play. Right? It's not just the bigger players would have access to the customers. So that is one. And to us, how it directly impacts, how I see the impact coming to delivery businesses is the adoption. Because if you look at today, of course, the pilot is happening in a few metros today. But ultimately, when the government takes such a big project, their vision is to go to next 125, 150 cities immediately in next 2 years. So what that is going to do to us is it will change the adoption percentages, which will go to the tier 2, tier 3, tier 4 cities, and even to the rural areas very soon. Right? So what it does is the quantum of people ordering online will increase by leaps and bounds. And that, of course, you would need the whole ecosystem to play around. And of course, the last mile being a critical part, it is going to help everybody in the long term.
Sure, thank you. And finally, with all of this democratization happening, there's going to be a huge data trail. We are going to need a lot of POIs. We're going to need a lot of nav integration. And Animesh, probably that's your cue to talk a little bit about how Hair's sort of ramping up with this and what are some of the use cases as you see them?
So let me speak about both the ULIP, which is the Unified Logistics Interface Platform, and ONDC. Now, ONDC as a concept, have been going on in the market for quite some time. People have been talking about super app. So I was quite surprised that the government beat everybody to it, and they came out with the super app. That was something very interesting. And if you look at any of these e-commerce, see today the location plays a very, very vital role for any e-commerce world, right? Today, when we talk about an ETA, or we talk about your tracking of your shipment, tracking of your order. All this comes because of visibility. Unless and until you as a user have a visibility to it, and this visibility is provided by the service provider. Now that service provider, okay, I'm not getting to the ISV mode, I'm getting maybe Amazons or the Flipkarts of the world. They ensure that your package is tracked. Tracking is one mechanism, tracing is one mechanism, providing visibility is on top of it. And that's where the location business comes into picture. Another very important thing which was told in that ULIP one, where Mr. Modi mentioned about how in their port, they've been able to take a turnaround for a container ship from 44 days to 26 days. He talked about when he was launching the ULIP. ULIP, again, the reason why I brought that statement was, what is ULIP? ULIP, again, is a digitization of the entire logistics services. And you would be surprised to know there was a survey in which it was found that only 6% of the supply chain people have visibility or have some kind of a location inbuilt into it. People have TMSs, WMSs, YMSs. These are, transport management system, your warehouse management systems, yard management systems. But the visibility is very, very low on that, or the location part is very low on that. And all these ULIPs and ONDC will bring a flip onto the location. And frankly, that is going to be very, very critical from your end customer perspective, right? Today, and I just want to end with one single point. See, there was a time when we sent out a package, we didn't even know when you were going to receive it. And this is what Amazon and the Flipkart changed it. Today, I buy even 100 rupees product. I get to know exactly it has left this place, it is now out for delivery, this guy is delivering it. But when I'm shifting my house and I'm sending the goods from here to Bombay, trust me, I don't have that kind of a visibility, right? So this is going to change that, and it'll revolutionize. It'll completely change the way we are looking at it, and that's where the location will play a very important role. Thanks.
Sure. Thank you. Yeah, I think initiatives at India level are always challenging, but when they work out perfectly well. Case in point is UPI. I was just hearing it from someone that idea was cashlessness, and then it has left people cashless because everyone sort of is fully adopted on UPI usage, and then there's no track of spending to the extent. But yeah, so I think for someone as large as India, it's always a challenge to deploy reforms at that scale and sustain them. And hopefully with ULIP, ONDC kind of measures, it will impact positively the entire value chain, and all of us at different parts of the value chain should stand to gain from it, hopefully building it sustainably. So with that, we have come to the end of this panel discussion. I would like to extend my gratitude to all of the panelists for very active participation. Probably we can take one or two questions. I know this is cocktail time, but probably if anyone's interested in interacting with any of the panelists, I'll be glad to facilitate some. Oh, I guess not. So the bar's open probably. All right, so with that, let's just close the session. Thank you so much for your august audience, and thank you to the panel again. Bye.